Alright guys, we're back. This is gonna be a fun few videos for me. We're almost getting to the end of the course. Really happy you guys made it this far. This video, this and the next three videos are gonna be my three favorite patterns that I use as confluences. Not used by themselves. They're used as confluences for me to say, okay, this looks like a good trade. Maybe this is a good area I can get in on. All right. The first pattern that I'm going to talk about, and I swear to God, this has made me a lot of money. I've passed a lot of FTMO challenges with this, and I can identify this on the lower time frames. Even on the 5-minute, I can sometimes do a very good job with this, and it just works so well, so well. Okay, you just have to be careful. And the pattern that I'm talking about it's called the 3-pin formation, the 3-pin pattern. Okay, you guys may have heard about it before. I learned about it a little while ago, a long while ago actually. But it works so well, and if you go on different charts, I want you guys to go and practice each one of these patterns every time. Like after at the end of this series, you need to go back and find these patterns on time frames, spot them, note them out. And what it's called is, it's called a 3-pin formation, 3-pin pattern. So I do want you guys to still look at your daily charts, especially when you're unsure of a situation, or if you're in a situation like where, we're on the daily time frame. GU's been pushing up for a while. This is daily. This is days. Okay, this is like from May all the way to like August, which is a long time. So when the 3-pin pattern is like this, right here. This is the best example here. Okay, and you want to first stick to finding this on the higher time frames as a confluence. Possibly, you're maybe looking to go short somewhere here on your smaller time frames. You find the supply zone. Go to your daily time frame and see if you see this. If you see this, that's an extra added layer of confluence. If I see this, I'm confident in my short on the daily. If I see this on the weekly, I know we're potentially going to be moving in that direction. Okay. The 3-pin formation is when a daily candle will push up and leave a wick, which is the left shoulder. It's actually a head and shoulders basically, on the smaller time frames. The middle candle will be sort of like a big rejection candle. It doesn't have to be huge rejection, but a decent sized rejection. And the third candle will just be a push up into the wick, and then it will start pushing down. So 1, 2, 3, and this is the best looking one that I can see at the moment. It should look like this. This is the case of the bearish scenario of the 3-pin pattern, okay? If I see this at a key level, okay, look at this. This is a key level right here. We know this is a key level. This is the last time we were in this area on, the year before. Very key level. If you see this at a key level, or if price has been pushing up for a very long time and you're like, I want to short this eventually, and you're getting ready, you see break of structure on the, this would have been a break of structure on the lower time frames. Just quickly hop onto your daily and see if you can see this. If you see this, I'm gonna be in this trade. I'm not missing this trade. Hell no. Like, I'm so good with spotting these out, and you will be too. That this is just an extra layer of confluence, Then you can start looking for your shorts up in this area. Okay. Up in this area. Let's see if we can find a bullish scenario. My favorite sometimes are the bullish ones actually. This one's right here. Now this isn't in a key area, so I wouldn't say paying too much attention to it. But if I see this on the daily anywhere, sometimes it's just, if I'm trying to take a short and I see this, I won't be taking that short anymore, because this just means it's gonna go up. We have the left pin, which is the left shoulder, the neck, and the right shoulder. Okay. It's always gonna be. This is gonna be a small pin. The middle one is gonna be the biggest, and this one should never break the middle one. It should never break the middle one. I've caught some sniper entries where I've noticed like this was already being formed, and when this push down happened, I caught some crazy trades Just trading this pattern alone before. I used to trade this all the time. Like it would just be crazy sometimes. Like when you find this, man, just be on the lookout, especially on the daily time frame. Daily, sometimes I even take this on the weekly. Just when I'm starting out the week, and I just want to see, you know, do we have a directional bias for the week? You know, even this here would be considered a 3-pin formation, right? Like this week has already ended, but we see this 1, 2, 3, and like if Monday starts here, you know what to look for. You know what I mean? You know what to look for here. So you can catch this on the daily, the weekly, sometimes even on the 4-hour. I wouldn't in the start go any lower than the 4-hour to try to find this pattern. Just try not to go on anything lower than the 4-hour. This isn't the best example of it because we don't really have the big wicks. Like we don't have a strong wick here. We have a decent sized wick here. I mean, I would still take this, but in the start, I'd rather have you guys look for them in key areas. So let's see if we can find one in a key area on the 4 minute. Okay, this would be a key area, right, on the 4-hour, because you've already drawn your refined zone here somewhere on, you know, the lower time frames. You see it happen once, but then this is like, okay, you know, you're getting ready to take the short somewhere up and around here. Go up to your 4-hour and you see something like this. You know, the first pin, you see the rejection pin. You can be very confident that this is probably going to push down, and you know where to put your stop loss. It's going to be above the 4-hour wick like that. Okay. Let's see if we can find some more. Trying to see if I can find you guys. Oh, what did I just do? Whoops. Okay. All right, there's one right here. That's a pretty key level. Market broke all of the structure to the left-hand side on the lower time frames. Boom, structure breaks, pulls back. You'll have the zone probably drawn out on your lower time frames. 1, 2, 3, boom, smashed. Stop loss was above this wick, totally smashed. You could have gotten such a big risk to reward on this trade. Okay, so again, these extra confluence videos, I want you guys to come back at a later time, at least a week. Please do this correctly. I'm going to talk in the end on how we're going to be back testing this, but we're going to end this video on this pattern here. If you want to draw it out on your notebook, draw it out. Make sure you put taken at key levels, areas of interest, higher time frame, 4-hour, daily, weekly. Don't try to use, I mean, on the hourly, it can be very great for your entries, but you guys already know, you know, if it's in our zone, it throws up a doji and we break the low, we're entering anyway. So you don't really, it's not a pattern that you really need to pay too much attention on the hourly. You're kind of already looking out for that on the hourly, but I mean, it's great if you see this on around your, you know, this thing right here. Let me just show you on the hourly. If you see this on the hourly, around right in your zone, like let's say your zone was, you know, this was your zone right here, and you see this, man, get in, stop loss right above there. But for the sake of finding the pattern on, you know, as an extra added layer of confluence, try to find it at key levels on the higher time frames. Okay, higher time frames. All right, we're gonna move on to the next pattern video.